What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a peek over here at the Bitcoin price chart because we got a pretty decent sized move yesterday, with the price of Bitcoin dropping about $1,000, going from about $19,700 to now currently at $18,700. Not too much of a surprise considering the things that we've been talking about in here. If this is in long-term accumulation happening in here, that there would still be steps down. But the thing we are looking for at this point is for this to pretty much be coming to a conclusion pretty soon. Doesn't mean we can't just waddle sideways in here and just dip a little bit, but waddle in here for a while. But definitely no more of just the kerplunking down at this point. In our accumulation schematic, we should not be setting new lows. We'll go back through the reasons why we shouldn't be setting new lows below what happened back there on June 18th with the price of Bitcoin hitting $17,600. But this price does have me very intrigued from a risk to reward perspective, and I'll show you why. Currently, for Bitcoin to get down to the low of where its market cap hit, it's about 5% away. The whole range that we've been in, there's been points in time where this range has been significantly higher, getting as high as being 29% away from the low, but currently right now it's only 5% away from the low. This particular price level that the market cap has hit is such an intriguing price level that it has all the markings of being the actual bottom. But if it's not, well, there's only 5% between here and there, given the ability to set some pretty hard rules that, well, if we go below there, all bets are off. We have several things throughout history to draw on to present the argument that the bottom is already actually in, whether that's utilizing previous capitulation fractals, looking at support levels like the previous all-time high, which we've hit, and including the same region of previous fractals, along with Fibonacci retracements happening in here, us hitting the 786 Fibonacci retracement for our lowest price level, along with oversold weekly RSI in here, which was a signature marking of the bottom of each of our previous bear markets for Bitcoin in here. In addition, we've also had the cross of the 50-week moving average and the 100-week moving average, and every time that has happened in the past, the bottom of Bitcoin had already come in 10 to 14 weeks prior, which we've matched. It's been about 10 or 11 weeks. So like every single one of these rules says the bottom is in, creating a compelling argument for this being an interesting accumulation price, because if it goes below here, well, there's only a 5% drop in there. And if this level gets taken out, then the whole thing is broken based on everything we've seen in the past. Every time we've seen the 50 and the 100-week cross, the bottom was already in. We've hit the 786. We've hit the previous all-time high. We've hit oversold RSI. We've hit previous fractals. And we've matched the fear and greed sentiment of this market of spending a prolonged period inside extreme fear, getting out of it, pulling back, normal. But once you get out of here, that had already marked the bottom. It has been almost 4 years since I have bought Bitcoin, and I can tell you this is a compelling place for me to start accumulating some Bitcoin. However, having a stop loss right here, right at the bottom. And if that floor gets taken out, that means we lose the 786 Fibonacci retracement. We lose the all-time high. Where the 50-week crossing the 100-week meant nothing. Oversold RSI meant nothing. Fear and greed index meant nothing. All those things will not matter because this time will be different. The thing about it is I'm not really feeling super rushed right now. We've done a pretty good job matching time and matching structure that if we're going to Wyckoff accumulate down here for some time, you could see we're just going to be here for a while. Considering this price has moved pretty quickly, a little bit of time to let it breathe for a minute, make sure something crazy isn't happening. At least that's my best guess. But should we start to find some support in here and start to kind of waddle sideways and get this to calm down in here, it's looking like a pretty compelling accumulation zone for me with a stop loss set right at the bottom. And I know right now, it doesn't look that sexy right now. Once we had like the Celsius stuff happen and Three Arrows Capital and all that stuff, Bitcoin dropped about 45%. But we can even see in here back in 2018 when the ending capitulation came in for Bitcoin right in here, it's about the same, 44, 45%. Bounced off the lows and then just kind of worked itself back down to these lows once again, to then eventually pop its way back out slowly, off and away it went, really getting itself out of there. And it too, from 2018, when it was having its 50-week and 100-week cross, was doing this same style thing back down here at the lows. But the confluence between 2018 2022, and 2014 is that when these crosses happen, when this exact same pullback happened in here all three times, we didn't go on and set new lows. So if we go on and set new lows, something different is occurring here. But it's rare that you can get such a clear set of rules to follow on these types of things, at least for me, right? So, you do whatever you want to do. I'm not a financial advisor. This is an investment advice. I'm telling you what's going through my mind for accumulating Bitcoin because I haven't done it in 4 years, is that there's so many elements set up in here that it creates a compelling argument for me to finally start accumulating some Bitcoin due to it being so close to this low and so many arguments for it being the low. But if it took out that low, we know what would happen. You lose the 786 Fibonacci retracement. You lose the previous all-time high. The 50-week and 100-week cross meant nothing. Oversold RSI meant nothing. Fear and greed meant nothing. All these things, something different is at play. But when you have all these rules happening at the exact same time and there's only this much of a drop left to be able to invalidate all of them, it creates a compelling argument for me to begin accumulating. Now, knowing something about me with Bitcoin is that I've really just kind of like hedged my altcoin position by owning Bitcoin throughout history. I don't think there's very much percentage opportunity in Bitcoin. I treat it way more as like, is Bitcoin going to be the king? Is it going to steal back dominance? Is it going to cause a nightmare for the altcoin market at some point? And do I need to own some Bitcoin just to hedge that? That's how I treat Bitcoin. I've never been in the camp of, Bitcoin is going to be the savior of the world. I still don't think that, but I like having the opportunity to be able to accumulate with a good risk to reward ratio and very clear rules for me to say, this isn't working out anymore. I'm out of it. But mind you, I haven't bought Bitcoin since way back over here. That's the last time I bought Bitcoin. And this is a compelling place for me to be adding in here. But if we break below the previous low that's already been set in there, it will no longer be compelling to me anymore. But I presented all the cases on why it is incredibly compelling while it sits here right now. The thing is, this could go on for a while. So I'm going to treat it like that, and I'm going to give it some room to breathe in here. But just knowing that the price action that we saw happen yesterday, still in line with the things that we've seen for accumulation to happen. Now, really for the rest of September, kind of looking for Bitcoin to just kind of chill out for a minute. And it'll be interesting to see what happens with the rest of the market during this time, considering we have so many catalysts happening elsewhere. With the Ethereum merge coming next week, NFTs coming on September 13th for XRP, and then the upgrade to Cardano coming on September 22nd. All the while, the Bitcoin dominance is sitting right here at the low over here on TradingView, while it has already broken down on CoinTrader Pro, not quite yet there on TradingView. So technically speaking, it's still on support here over on TradingView. But what happens if that happens? So lots of excitement in the altcoin market coming. And the move that we had happen yesterday doesn't faze me because it's really the things that we've been looking at. And this is really what has happened each time we've been at these lows for Bitcoin when the bottom is coming in, is that there's been this secondary test to pull back down in here. And even in 2014, it did it twice, which is a Wyckoff accumulation. So it's eventually an aggressive spring did come in at the end. So nothing out of the ordinary with what happened yesterday. The only way things would be out of the ordinary would be if we take out the actual low. Otherwise, pretty awesome risk to reward ratio for me to start accumulating with some clear rules that if that gets taken out, you saw it, it deviates away from everything. So that's pretty much it for Bitcoin. It seems that it's probably still going to be boring. The only way it wouldn't be is if that low gets taken out and all of those support levels get broken. Otherwise, each time a bottom has come in, it's done pretty much this exact same thing. So I really think still the focus for the next week or two is going to be what's happening with Ethereum, XRP, Cardano. And I think that's where the excitement of the market is going to be so long as we're not breaking things. So that'll be the focus of the rest of the week so long as Bitcoin stays right in here. And we'll keep this video relatively brief today. I think that covered it pretty good. So again, we have the merge coming for Ethereum next week. We have NFTs on the XRP ledger next week. Give you guys one more tease of that. You can see what we've had in the works over here. Otherwise, I will catch you guys tomorrow. And if something dramatic happens on the charts between now and then, maybe I'll hop on. We've been pretty aggressive, but it seems more likely we're probably going to calm down. So, all right. That's going to be it for this one, guys. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.